I'm sure you're aware, I'm a CPA, which sounds extremely boring. I'm also a subject matter expert in cannabis. So I'm the national practice chair for my firm, HBK's Cannabis Industry Practice. I have a team of about 17 people that work with me, and this is all we do. We don't dabble, true subject matter expertise. So my hope is we can talk about some of the things that are important in the accounting industry when it comes to cannabis. But also, I've seen a tremendous amount of different things throughout this industry over the last 7 to 8 years that I've been practicing. So my hope would be that maybe we can make this a little bit interactive. And if you have questions, whether it's related to accounting or just the industry in general, I'd be happy to answer those and talk through, what I've seen, what my thoughts are on things, whatever you really want to talk about. So I think the cost accounting.
Actually, if you could just start, while you were out, I said, you set up this whole deal at HBK.
Correct.
Obviously, it wasn't there when you started. Maybe I'm stereotyping your firm, but my sense of your firm is a little bit on the conservative side.
Extremely conservative.
Okay. So tell us how you convinced your firm to start a cannabis practice.
It's actually an interesting story because HBK is an extremely conservative firm. It started in the Midwest. It really was started, one of the major clients was somebody that went on to own an NFL team, and they kind of, had built a practice around this in the Mahoning Valley in Ohio. Just a very conservative area. Firm really never took a lot of risks. I saw this as a business opportunity. And about 8 years ago, I presented to the firm's essentially board of directors that I'd like to spearhead this. And I think when I initially made that presentation, they thought I lost my mind. I think I left that room thinking that it was going to go one way when I went in, and I don't think it went exactly how I thought it was going to go. It was basically like, yeah, you can do this, but don't wear any of your firm branded logo to events, things like that. About a month later, showed up with a real client opportunity, and it was a lucrative opportunity, and the firm actually backed us on it. Interestingly enough, they didn't pay, which is not uncommon in the cannabis industry. Bad receivables are something I've learned to manage credit risk much better over the years. But to their credit, they took a chance and they rolled the dice. And at this point, we're one of the only major firms in the entire United States that has a dedicated cannabis industry. It's a strange place to launch it from. I live in Naples. There's only one dispensary in the entire county. It's on Marco Island. So to be the practice chair of the cannabis industry group in Naples is odd. But, that's where I like to live. I work pretty much anywhere. We had a dealership person who used to say, I work from Portland to Portland. Portland, Oregon to Portland, Maine, it doesn't matter. I'll be wherever you need me. That's kind of been our approach too. We work throughout the country. And it's grown. It started with just me and one other partner. And now it's me, my partner Stacy, and we have about 17 team members. And this is it. So I'm assuming, you've heard, is the focus primarily been on the Florida cannabis industry? Is that primarily where you focus?
Don't think. I mean, I can spouse my opinion, but what have you all heard?
For us, it's more focused on Florida because we live in Florida and we are doing a project about California's market and stuff like that. So it just depends on your perspective.
Yeah, that's good. That's good.
Yeah.
They have a paper doing the California black market industry.
That's an interesting thought.
And then we had a lady from Colorado, and we had Rob Seacrest,
Yeah.
Florida, maybe last week.
Awesome.
So we've got some outside folks that attention.
So just to kind of give you an overview from an accounting standpoint, I mean, really what we do for clients, is there even an accounting major in here? Anybody who's in the business school who's taking an accounting class?
Entrepreneurship.
Okay.
We got a couple.
So we've got a couple. So you know just the general basics of accounting. But so public accounting firms generally, there's two things that they do a lot. That's tax compliance and tax consulting. And then what we would consider assurance or testing. We're auditing, we're reporting on and giving an opinion on the fair presentation and correct presentation of financial statements. So we do both of those things for the industry. Any core service that any other client would receive at HBK, we do. What we really, though, try to build on top of that is true subject matter expertise. What we want is for our clients really to be able to come to us for any issue that they're having. And finding professional services in the cannabis industry is not easy, it's challenging. So if it's something that we can't directly do, we try to build enough relationships that we can help them find the right person that's gonna help them do what needs to be done. You know, it's really my goal for this industry to have access to the same kind of representation and professional advice that everybody else has access to. And it's not easy to do. So that's kind of how we built our practice. I would say probably the two things that, you know, I'll talk a little bit about are probably two of the more hot button issues for the industry, which is cost accounting and tax compliance. Because the income tax rules that apply to everyone outside of cannabis don't apply to them. It's very, very different. When I was in college, I remember when I came out, I was determined to go into public accounting. I was never going to be in industry. And then when anybody ever asked me what my least favorite class was in college, it was cost accounting. I hated it. And now that's pretty much where I focus a ton of my time. When we really break this industry down to what it is, it's industrial agriculture, manufacturing, distribution, and retail, all wrapped into one employee. Well, it's vertically integrated. You have to do it. You're not allowed to have wholesale transactions here. So, you know, in different states, it kind of breaks that same way. But really, when you look at the business, it's not different than if you were manufacturing anything else or another industrial agricultural product. But the roles are different, the people are different, and the access to information is different. Like, there's no IT solution that's a comprehensive package ERP system that they can use to assist them with this. It just doesn't exist in the industry. So, you know, one of the things that we really try to focus on is helping people understand their costs. When I started in public accounting, construction and real estate was the industry that I kind of grew up in. I spent about 12 years doing that. And you know, before that, I was a little bit of a generalist, went into construction and real estate, and for the last 7 years, this is pretty much all that I've done exclusively. If you don't know how much something costs, how in the world do you know what to sell it for? And if you go into any one of these retail stores, whether it's in Florida or anywhere else, you walk in there on the right day, 40% off, 50% off, buy one, get three. They're trying to get rid of inventory because the reality of it is, a lot of times they don't even know what it costs. So one of the things we really focus on is helping our clients understand their active ingredient costs, but also costing out every single SKU they offer in their stores. So if I can get down to, you know, what it costs to cultivate exactly 1 gram of flower, or I can cost out what it costs to, you know, come up with 1,000 milligrams, or even break it down further, I could come up with 1 milligram of distillate. If I know what that costs, I can start to build the process. And it's really complex because you have inputs, everything that goes in to growing the plant or manufacturing, throughputs, everything that goes through, and then you have what comes out. And to get that information is probably where we spend most of our time. Once I have the information, it's actually pretty easy for us to build the cost model. This is what every manufacturer on the planet has done for the last however long the counties existed. This is what they've done. But to get the information is challenging. And one of the challenges in the industry is you have a lot of people who are very, very good at cultivation. They're good at extraction, but they've never actually practiced in the regular business world like everybody else does. And there's a big difference going from doing this in, you know, your garage or some storage facility somewhere and bringing it out of that and into the legitimate business world. It becomes different. It scales differently. And so getting them to understand that is probably our biggest goal, but also making sure that they understand what we need to get them to where they want to be. You know, a lot of times you go in and it's usually 5 or 6 conversations. I can come in and start talking to you about what you do when you cultivate cannabis plant. I guarantee you, the first 3 times we talk, you won't tell me anything. You won't tell me, you know, for example, like one of the things on extraction, like, yeah, it's great. Okay, this is the extraction process. well, what if it's not clean? What if you need to remediate it further? What if you need to remove more solvents than you've initially done? Like, what's the cost of that? How often does that happen? So it's really basically making sure we understand the entire process. And I would say just in general, I think that's where a lot of accountants miss the boat. They are so focused on the core things I told you about, like the tax compliance or assurance work and putting together financial statements. They don't understand what their clients actually do. And on our team, like, could I go out and could I cultivate or extract? I could. I wouldn't be great at it. I know enough probably to, screw it up a few times before I maybe kind of got it right. So by no means am I an expert, but when you talk to me about it, I understand what you have to do to get it done. And that's kind of where we really come in, is focusing on that understanding, mapping it out, and then starting to assign the actual cost to everything that goes in, through, and comes out. And then I can tell you to the penny how much it costs you to make whatever it is you're gonna sell. And I would say in the industry, that's probably, arguably, that and IT are the biggest pain points.
IT, what you said?
IT.
Stop for a second, because I think there's an interesting, you made a couple of people in my head that a lot of people from the legacy cannabis industry, extremely good cultivators, know how to create wonderful plants and wonderful flowers, everyone can find that, but they get into the business world, they don't know how to manage that. And you specifically mentioned scaling, to go from a garage to a full-blown business. What do you mean by scaling? How do things change when you go from knowing intimately the process of how to grow, distill, and create your own product to now you actually run it?
That's the biggest challenge for people. A lot of times in the legacy market, even somebody who had a very large, call it, legacy cultivation facility, the business metrics that apply in the real world, that, I shouldn't say the real world, it's all in the real world, but in the legitimate business world versus the legacy market aren't necessarily the same. If you're in the legacy market, a lot of times what they're looking for is certain types of quality. They want genetics that, have different attributes than what makes sense in the business world. So if you really think about it, to make money in the legitimate cannabis industry, what do you think your genetics actually have to do? What would be the attributes you would want for your genetics in the legitimate business world?
Consistent yield.
So high yields, right? Disease resistant, quick flower. You want things that make business sense. That isn't exactly what everybody wants in terms of their genetics that they're going to buy. And I will tell you right now, it's a fact that people that privately cultivate, the same people that commercially cultivate, what they cultivate for themselves is not the same as what they cultivate for the market. So that's a very different transition. Changing your mindset to think about how do we make the most money as a business concern versus making the highest quality product that I would like and that my customer would like. They're not the same. On top of that, you're now not just doing this on your own. I mean, I don't know if has anybody here ever toured a commercial cultivation facility? Okay. How many people were working there?
It was actually in the process of being built. It's in Las Vegas, so no one was really working there yet. There was maybe 3 people, but it was like 200,000 square feet. It's absolutely massive.
Yeah. There's going to be hundreds of people working. There's a big difference just in life in general of being responsible for supervising like 4 or 5 people, 200 people. It's just different. It's just I think the shift in culture when you go from one to the other is very hard for people to adapt to. And when you talk about like the legacy market in California, that's a state that's a prime example of this. A lot of these businesses are half in and half out. When you come to Florida, you're either in or you're out. Like the state is very strict, it's highly regulated. At the if you want to be in the cannabis industry in Florida, you're going to run like a legitimate business. That's not true in every single state. And what we've seen is the success of the businesses, they do much, much better when they're regulated and they run like an actual business. The half in and half out, there's a lot of issues. Just to give you an example, what I've dealt with before when it comes to scaling. People don't, when we talk about cost, they don't understand things like what we would call a contribution margin. In other words, like what does your idle time on your equipment actually cost you? What does your empty space in your facility actually cost you? These are things nobody thinks about in the legacy market. It's very simple for them. It's cash in, cash out. That's how they manage their business. That just doesn't work. It doesn't work when you're running any type of business. I mean, when I was in construction, we had clients that would think that way. It was cash in, cash out, oh, I'm making money. Are you really? When we drilled down, a lot of times they weren't. You might have had cash at the time, but you owed this, you know, you were gonna take warranty hits on this. At the end of the day, they weren't making what they thought they were making. And I think it's a very similar concept here. If you think that way, you're probably not making as much money as you think you will. Does that answer the question?
Any follow-up questions?
When you're looking at costs like of what's going into the facility, are you also looking at like what the lighting is costing, what the air conditioning, watering, all of those? Like, are you taking all of the pieces of what is going into growing as part of that cost?
Absolutely. So we're basically, what we do is we're gonna take every single cost of running the business, analyze it, figure out what is actually what we would call cost of goods sold. That's the cost of acquiring your inventory, whether you grew it, manufactured it, or bought it from someone else. That's the cost that we want to work to capture. So all those things that are direct, for example, like nutrients and irrigation, things that directly go into it, we capture that. Then on top of that, we want all the indirect costs. So, you know, I have a director of cultivation. What percentage of that person's role goes into cost of goods sold? We basically break it down to the most granular level that we can get to. We even look at, you know, in terms of the equipment, we look at idle time, what the capacity of it is, what capacity you're running it at. Yes.
So it's like the most prominent expense that probably gets overlooked by these businesses.
So that's an interesting question, I'll tell you why. To kind of pivot a little bit into the tax discussion, because that applies here. Has anybody in here heard of the Internal Revenue Code Section 280? Okay.
Google now.
What does it say? Anybody want to take a stab at it? It's only like 70 words, if that. It's very, very small.
Since the product is federally approved, that they're going to have 70% tax on it?
So essentially what it says is, if you are trafficking in a Schedule I or Schedule II controlled substance, the only thing you are allowed to deduct is your cost of goods sold. So the cost that I'm talking about is the only tax deduction you're entitled to. If you own a retail cannabis store, the rent you pay, the employees that you pay to work in retail, that is non-deductible. Yes?
So, in the retail, what about the entertainment, where you're not really dealing with the actual sales of cannabis, but you deal with the quote unquote, like, the buy-through of cannabis?
So give me an example.
So just I'm doing a entrepreneurship thing where I'm trying to do a cannabis lounge, kind of like a liquor lounge, tobacco lounge, cannabis lounge. Though I don't sell the product, would the quote unquote trafficking of the consumption on the premises be considered part of that community?
So that is probably the million-dollar question. If you have the actual answer to that, you will be very wealthy very fast. And I'll tell you why. There's nothing that's set in stone in this industry. The government's position is that you're bad, and everything you do is bad, and we will apply 280E to you every chance we get. There's no rollings on this. My personal opinion on it, it depends on how you pay it. So if you think about, for example, the collectives that first started in California, they weren't actually trafficking. Like, I would come in with my flower, you would come in with your flower, we give them all to the collective, and then people would come in to use cannabis for medicinal purposes, and they'd reallocate it, you basically pay a membership fee. The government's position is that is absolutely 100% trafficking, and 280 applies. So, I think that you're probably setting yourself up for a legal fight if you think 280 doesn't apply there, but there's no firm answer. The tax court hasn't tested it, the IRS is so thin, they haven't really surprisingly challenged our clients in the last 3 years because they're so understaffed. If they get the 87,000 agents that they're allegedly gonna get, I expect to hear from them very quickly, because I heard from them pretty much every day before the pandemic. But there's really no good answer there. We're sort of in uncharted waters. We're trying to find the best positions for our clients that we believe are supportable. I was told early on in my career, I don't want famous clients. So in other words, I don't want your name next to a tax court case because we landed there, unless that's just really, really, really where you want to be. To go back to your question, the reason we probably don't find as many costs overlooked, they are so tax motivated to jam everything they can into there, it's distorting actually what their costs are. So they're more like, they would, my fees, for example, would be non-deductible. If you paid me as a consultant, it would be a non-deductible expense. I'm not coming in and helping you actually, produce your inventory. I guarantee you they're trying to deduct my fees. It's just, they want to jam as much stuff in there. And it's problematic for multiple reasons. Number one, they're just setting themselves up to get just wrecked by the IRS. They're going to get audited. It's not, in this industry, it's not if, it's when you get audited. That's just what's going to happen. Two, they're distorting their financial picture. And so then you're getting into territory where they almost want to keep two sets of books. You can't do that. And, if you jam everything into cost of goods sold, do you really know what anything costs? Probably not. Also, in the event you actually want to sell your business or get someone to invest, and your margins look terrible because you're tax motivated, the last thing an investor wants to hear is, no, the real margins are this. We just put all that in there because we wanted to cheat on our taxes. That's not really what an investor wants to hear. So it's a significant challenge. These businesses need money. They can't borrow money. They need capital. They're paying taxes at an oppressive rate. A lot of people can't even draw a salary from their business. There's this perception that the cannabis companies are making all this money. It's actually not true. They're really struggling. The best thing for the industry would be if the president would deschedule it. It only takes an executive order. It can be done at any time. Even moving it to Schedule 3, that's kind of a nightmare because then you've got to deal with the FDA, but it's better than where we're at now. Because when you're paying taxes at a 70% rate, we've had clients that had $70, $80 million losses and a $25 million tax bill. It's crazy. How do you expect the business to survive? There's going to be failures.
So by just descheduling, tax issue goes away.
Tax issue goes away. It's 280 specific to Schedule 1 and 2. So if you move it to Schedule 3, it's still regulated, but the tax issue immediately goes away. And there's a misconception. People think it actually takes an act of Congress to move it. It doesn't. The president can move it any time. Well, so the process kind of goes where it started here. We saw before the election, he said, I want you to review this. That's the first step in the process. So they review it, and yes, they come back and say, yeah, we think you should move this to Schedule 3, or you should move it off the controlled substances list. The president can do it with a sign of the pen.
Is there an incentive if the president doesn't, any president, not want to do that?
I've been saying for 10 years that it'll be federally legal in 5 years, and I'm still saying that now. I've become increasingly pessimistic. I think there's a combination of things. I think there's significant lobbying against descheduling it. I think, quite frankly, the Republican Party's base, for whatever reason, is not in favor of legal cannabis. I think it's a small percentage of people, but if you think about how our political system works, in order to get elected to anything, you got to get out of the primaries. It's two parties, that's it. If you try to come down the middle, you probably just result in one person not getting it. You can't really prove you, two people not getting it. But, I don't think there's a single issue voter that I've met on on cannabis. You run into a lot of people, they vote the way they vote, and sometimes it's just there's one issue. There's like one issue that they're passionate about. Whoever is aligned with them on that issue, that's who they vote for. Those people don't seem to exist in cannabis, even in the industry itself. There's just not enough people, I think, that care enough about this being descheduled, that there's any incentive for the president to do it.
I guess I was being a little bit, more of a cynical line on my question. Does the government make a significant amount of money on cannabis that by taking that, by removing section 280, they will lose a significant amount of revenue?
I don't think it's as much revenue as anybody really wants to believe. There is revenue there, but you could have some sort of federal tax on, an excise tax on the actual transactions. There's all kinds of different things they could do that I think they would make up for that anyway. In fact, how many of these companies are even able to pay their taxes? I don't know if any of you ever look at the publicly traded MSOs. They're using the government right now as their bank. I think it was one of the big ones. It might have been Verano. If you look at their financial statements, it's all publicly available. They owe the government over $100 million in income taxes. The reason they weren't paying was because for them to borrow money, it's going to be at 15+%. If they don't pay their taxes, the government's charging them 5%. So they're basically using the government as their bank. I mean, it's not stupid. It's reality.
Well, I was gonna say, because you were just saying the IRS is still heavily understaffed and undervalued, but could you really just not just circumvent, pay the fines and continue on?
Not really. I mean, if you get into, like, for example, if you're knowingly classifying things as cost of goods sold to get a reduction, and you understate your tax liability by more than 20%, that's actually a criminal. So eventually what will happen, normally the way the process works, they give you a chance to pay, you can pay a bunch of penalties, you can do this and that. If you do something they consider abusive, or for example, say you keep 2 sets of books they consider fraudulent, they can put you in jail. Yes.
What would you say is the biggest difference from a financial standpoint, from the Florida industry to a non-Florida industry where it's not all vertically integrated?
So the Florida industry is actually fairly favorable to effective operators once they're up and running. The barriers to entry in Florida are significant. And you really have to know what you're doing. I think that what we saw early on in Florida with a lot of the cultivators that came here and tried to use greenhouses, they weren't prepared for the humidity. We saw a lot of crop failures, a lot of mold, just a lot of problems overall. So back in like 2018 and 19, the state actually made quite a few exceptions and allowed some wholesale transactions, because if they didn't, I think that some of these businesses were going to collapse. But once you're up and running, the truth of the matter is you can pretty much have a monopoly here. I mean, you have one company here that owns over 50% of the market share. One business. It's unbelievable. And if you ever go out, they're publicly traded. Truly, you can look at their financial statements, they're making money. If you were going to invest in a cannabis stock, that's not the worst one. And that's really because of the way Florida works. They're going to issue 22 new licenses. They issued one last year. And that was the result of the civil rights lawsuit. They issued one new license, and then April 24th to 28th is the window this year to apply for a license. They're going to issue 22. So that'll add more competition. I think on the flip side of that, though, they just raised the fees to renew the license from like 60 grand to like 1.5 million, which when you spread that out over 200 stores, no big deal. You have 2 stores, and you're going to pay $1.5 million just to keep that open every year. That's tough. So, what I thought maybe we'd see in Florida, and based on the people that I've worked with who I know are going to probably enter Florida, they're really looking to make a more boutique, high quality type of a business launch here, as opposed to just capturing market share. I think raising those fees probably makes that significantly more difficult. It kind of puts the pressure on you to become big in order to absorb it. Did you have a question?
Before it was just, you said that they can schedule it with the, ended the prohibition of cannabis, so that affected it, or affected it?
So if they remove it completely, then it becomes just like anything else. It's perfectly legal from a federal standpoint at that time. All it has to do is be removed from that state. And then, it's up to the states to get into a big fight about how this is all gonna be unpacked. And, it's already starting in the courts. There was actually a court case recently where, somebody had sued, basically, I forget what state it was, but they're saying that this protectionism of only allowing sales within the state, was unconstitutional. And the court actually agreed, said it doesn't really matter what the federal government says, there's this anti-protectionism clause that they're violating. Interesting court case, we'll see what happens, I'm not an attorney. It was sent to me by an attorney who was really excited about it, but we'll see what happens. If they remove that tomorrow, all of this changes. It basically becomes like anything else. And unpacking that, if you look at prohibition, I think it was probably 15 years after that they actually had a normalized alcohol industry. We're probably looking at least that.
So would it take away vertical integration? Are you going to vote on it?
So the states, there's really two things that are gonna make them move. One, they get sued, which that already happened, and the Florida Supreme Court upheld the vertical integration. Which is funny, everybody I talked to who was in the know told me that the court was gonna overturn it, and they did. And the second thing that can happen is just over time, they're just gonna have to make the changes. So either they're gonna be forced by litigation in courts, or over time, we're just gonna have to accept that the protectionism has to go away. It's gonna be a problem, because here's the reality. California can supply at least half of the country, right now, with better quality products than anybody's getting. They could do it today. So the $30 million you spent on your cultivation facility in Rhode Island becomes worthless the second that that's allowed to happen. So what I would expect is that gets descheduled before California just comes east and crushes everybody. All these states fight to protect, the people that they've charged a bunch of fees to and have spent tens of millions of dollars building these facilities. There was another question.
No, I got it. So this court case, is that the one out of California? Because Rob Seacrest mentioned something about, move product across state lines.
I think it was in California or Oregon. I think that they sued, it might have been Oregon. I think that somebody sued the state and basically said what you're doing is unconstitutional. And from what I heard from the attorneys, the court actually agreed. The court basically said that you're just using the federal government as an excuse that really doesn't change the result of what you're doing in the constitutionality, is that the right word, of what you're doing. Is there a question back there?
Yeah, so the Trulieve is like pretty much the biggest dispensary around all those locations. I'm pretty heavily invested in Trulieve, so I've looked at their financials and whatnot. And with the fees increasing to renew the licenses, why do you think over the past 6 months to a year that their value has dropped so significantly?
It's really macroeconomic conditions that are affecting the industry overall. I mean, right now, you could go to California and buy a pound of flour that you wouldn't even see in the state of Florida for $600. It's just crazy. The price, the wholesale price of flour is just absolutely cratered. And I think there's been ripple effects across the board. The second thing that I think happened, we had a false bump from the pandemic across the board. I mean, we had clients that were on their way out in 2020. They were not making money. They were probably going to go out of business. The second the government told everyone to go home, it went through the roof. I mean, just through the roof. Pennsylvania is a prime example. That market is in shambles right now. And during 2020 and 2021, they were making a fortune. But if you look at Pennsylvania, nobody went to work for 2 years. They were all at home. And I think that the industry started to rely on those metrics, this is what it's going to be, this is going to last forever. And then we come back to reality, you get out over your skis a little bit, even a well-run company is going to see decline in their value. And if you look at some of them, I mean, I've made cannabis investments over the years, and I've gotten crushed on some of them. It just, there's just no rhyme or reason for it. They went out, they've gotten all this debt that, was based on, call it pandemic economics. And now reality sets in, they can't pay.
Yes. Where's the best place to grow the best
So when knowing what I know about the industry and talking to people that are really good at it, Northern California seems to be considered some of the best climate that you could possibly have. It's a plant, my understanding is it likes a temperate climate. So like even a place like Pennsylvania, I've talked to cultivators about the state. They said a place like Pennsylvania and Michigan, people don't think of it as being a great place to grow cannabis, but it actually is. You can actually do fairly well outdoors. And that's also creating a lot of price compression because it's just cheap to grow outdoors. But yeah, my understanding is Northern California is probably the best climate in the United States.
So does the weather in Florida affect like the price like profitability of weed?
It's much more expensive to set up cultivation in Florida than places where you can grow in the natural climate. I think that a lot of people perceive Florida because of the nice weather, that it would be a great place to just grow plants. That's actually really not the case. You really have to grow indoors here. I mean, there's some people that do greenhouse, but like I said, you got challenges with mold. There's a lot of things a lot of headaches that come with it in Florida. It's really, to me, an indoor grow state.
How do you feel about the international market?
What's that?
How do you feel about the international market?
You know, I've done work in Canada and a little bit in like one-offs, like places like Jamaica. A little bit in South America, but mostly, you know, with hemp, not necessarily with cannabis. I don't know as much about the international market. From when I talk to, you know, people at the MSOs that are really trying to break into there, it seems to be different. I think even when you think about going state to state, culturally, views on cannabis and products that people like and what they think is good versus what they don't think is good, it varies just here. And I think you're gonna have that whether it's in the UK. I mean, I've asked people about this, and I don't think it's true, but somebody actually told me that smoking flower really isn't conceptually popular in Europe. I don't know if that's true or not, but it's completely different than what the legacy market here would be. The other challenge that you have is the reality, the United States is really one of the only free markets. If you look at what Canada's done to the cannabis industry, they've destroyed it. The government controls profitability of cultivation. There's a reason why all these big Canadian cannabis companies don't make money. I mean, there was a time when British Columbian flower was considered premier. Now people don't want anything to do with it. They've destroyed it. But it's basically micromanagement by their federal government. So I haven't really done a ton of work. I've tried to at least stay in my lane with what I know, but it is coming. One of the other things I've heard is, for example, in Europe, the expectation is that they're going to allow imports. So South America, you know, is going to probably supply a lot of the flower that comes into Europe. I mean, that's at least what I've heard people speculate.
What is the difference between a hemp cultivation facility and a marijuana cultivation facility?
So hemp, they're the same type of plant, but they're different. I think you probably have all spent time on hemp. The reality of what's happening with hemp, I mean, I do see people sell hemp flower. I don't know anyone who's ever actually bought it. You know, I think that reality for hemp is if we have industrial uses, like if you could get somebody to buy in that we should use hemp to make drywall, you're going to be a failure. I guarantee you. That's, I think, what the future of hemp is. You know, the CBD market is a disaster. So to kind of answer your question, I don't think anybody kind of cares what the hemp looks like. You can grow it outdoors here all day. Florida, if there was an industrial use for hemp that you really had a ready buyer for hemp, you would make a fortune here in Florida. It could be our biggest agricultural commodity. With cannabis, it's not going to be the same. You have people that do what I would call wild growth here with cannabis, but they're doing it just for extraction. So they don't care what the plant looks like. Because the reality of it is the consumer, especially when it comes to flower, is very particular and they're very loud. If you think wine snobs are annoying, you run into these people. They want, like if you don't hand pick the flower, you didn't do this, you didn't do that, it doesn't look right. A very, very finicky customer. You have to make it look a certain way. If it grows outdoors and it's extractor and we're just getting concentrates and oils and distillate, nobody really cares. But for the most part, you're never gonna see an indoor hemp growth facility. It's just not, there's no point. At least, that's just my opinion. Does that answer your question?
After spring break,
I had a question. When you got started with this, was there, with the agricultural growing and stuff, was there another market that you looked at that was close, you know, as far as like growing plants and cultivating and all of that, that you could kind of model what you were doing?
Surprisingly, or maybe not surprisingly, from what I've been told, tomatoes are actually the most similar type of plant to cannabis that was called a legacy agricultural farm. So I did basically do just some like general farming, agricultural research, just to understand like how they sort of do things, how they account for things, how do they track their costs. That's been sort of a baseline model, but the reality is, there's nothing like this. There's nothing like this. I joke with people all the time that, you know, I commit 4 felonies before I have my first cup of coffee in the morning. It's the reality. If I respond to an email from somebody in the cannabis industry, technically I've just committed some sort of line fraud. There's nothing that I have ever done in my career that could have prepared me for the reality of what this industry faces. So from a general accounting standpoint, there's some. You know, our firm is heavy into manufacturing. That was one of our probably 4 specialties. And those people on that team were invaluable resources. They really helped me understand the cost accounting and got me to where I am, because without them, I just didn't understand it. I never done it. You know, construction costing is very different than manufacturing. But, you know, from an agricultural standpoint, I would say just general farming of tomatoes seemed to be a nice segue. I've had multiple clients over the years that were tomato farmers that then pivoted into cannabis, and every single one of them has never had a crop failure in their life. Even if they've never grown cannabis before, they've never had a crop failure. Does that answer your question?
you don't have no Chuck Oburn, do you?
What's that?
Chuck Oburn, he's a vegetable grower.
Really?
Yeah, in Devil's Gardens in southeastern Henry County. Really beautiful hemp plants.
Yeah.
Growing for CBD flower, stuff like that. When the University of Florida looks like trash. He was doing a really good job. That was fun. Spend a little bit of time, I want to make sure we understand the tax issues. You mentioned cost of goods sold and indirect costs. Is everybody really comfortable with those terms and can know, if you threw out names of different things, you feel sort them out?
The best way I could define cost of goods sold is it's whatever it costs to get the product that you're going to sell. Once you have it, everything that it costs to sell it, to store it, pretty much all of that is going to be non-deductible. There's some exceptions for storage and security, but they're minimal. But that's really, when you think of cost of goods sold, it's what does it cost to get your product. So if you're purely retail, it's just what's the wholesale price plus shipping, right, whatever that is.
So, and you said cost of goods sold is the only deduction that dispensary
Correct.
receive?
When you go into a dispensary, the people you talk to, the building, all that stuff in that retail location is non-deductible. I mean, imagine that, like, if you really think about it, what that does to the taxpayer.
All right, so stop there for a second. So say we have a industry out in Colorado where you have a processor buying it from a grower, who then in turn sell it to a dispensary. So when the processor buys the raw material from the grower, that's his cost of goods sold, right?
It goes in, so it'll be that, whatever raw material they buy, plus the cost of making their final product.
Correct. But from the grower's perspective, they're gonna charge, the price they're gonna charge to the processor will include all the other stuff like the electricity and personnel and, you know, overhead stuff that normally you couldn't deduct.
Correct.
But the processor can deduct that.
So the way, in terms of losing tax deductions, cultivators lose the least, Because if they're just standalone, they lose the lease because most of what they do is gonna be cost of goods sold. They're gonna have some minimal, maybe selling and distribution charges. Processors are then second, because they're gonna get deductions for everything that goes in to say they're making distillate. And then retail is where they get really crushed. That's basically, other than whatever it is you pay to buy the inventory, it is not a.
So in that, I'm just trying to think about a vertically integrated company versus a horizontally organized. Who pays more tax? Collectively, not, a single vertically integrated company or three companies that are connected with production process, each paying their own tax bill.
I'd say the vertically integrated probably has the most flexibility of minimizing impact. Standalone retail is the worst possible situation you can be in. When you're vertically integrated, you're essentially gonna capture all the price, all the cost of all your manufacturing. You're gonna take a hit on your retail. So, when you have 200 plus stores like Trulieve, they're taking a hit, but it's not a significant, if all they did was own those retail stores, they probably would have a hard time staying in business.
So Florida is the only state where you can go down predominantly one out of dispensary. Does that make more money for Trulieve? Or whatever?
Well, so it seems their business model was to capture market share, and they did it very, very well. The reality of it is, you can't go too far down the street in Florida without running into a Trulieve. So I think when you think about any big retailer, when you have that kind of presence, you're gonna be successful. And, I know tons of people who go to Trulieve. I've actually never, believe it or not, I've never actually been in one of their stores and purchased anything. It just, to me, it's like any other major retailer. It's a great stock, but it's not necessarily the right fit for me. But yeah, I think in a state like Florida, when you have 200 retail stores, you're gonna be dominant, you're gonna be successful. To get to that point, very, very expensive. And do I think anyone else can get there now that they're there? It's gonna be tough. They did it first, and they're gonna be there for a while. Does that answer your question?
Yeah, pretty much, yeah.
Yes.
So like, that the government, signs the executive order and everything, fully federally legal and whatnot, kind of like how alcohol is, how does that affect the companies now where, despite having quote unquote head start on pharmaceutical companies, how does that affect them in terms of taxes and revenue, loss, gain, and operating expenses?
So I think that when it comes to the tax issue, if it gets descheduled, it becomes federally legal, the tax issue completely goes away. Which, that's good for anybody operating in the industry. I do wonder sometimes if and I don't have a clear answer for this, if I was in a position that a company like Trulieve is in, where you're that market dominant in a medical market and that profitable, do I really want it to change? Does it benefit me for it to change? I don't know the answer to that. I do wonder sometimes, I think that everybody, if you look at the big companies, they've all put significant amounts of money behind making Florida, for example, in any state, making it legal adult use versus medicinal. So I would just, based on how they're signaling there, I gotta think that they think it benefits them to go to adult use. But at the same time, Florida's probably one of the states where once you're up and running at the scale that they're at, you're making money. You're guaranteed to make money. I guess I can't completely answer it. I think there's probably pros and cons for a company that big for it to go full adult use, full legal, versus kind of staying the way it is, where they sort of have a monopoly.
Even if it goes fully legal, adult use, Florida as a state can still impose the constraints of vertical integration versus other states that have chosen not to do those.
Correct. I think states probably will still continue to not want interstate commerce, because they're gonna they're gonna wanna protect these businesses that they've charged a bunch of fees to, and people have invested billions of dollars into these companies. There's gonna be an incentive to protect that.
Mr. Seacrest made a comment last week to the effect that Florida companies, because of this protection they had, would not do well in an environment that was completely open to interstate commerce and to particularly California and Colorado operators coming in, because in his opinion, those folks are a lot more savvy, competitive, nimble.
100%. I completely agree with that. For a big portion of my journey kind of in the cannabis industry, I didn't do a lot of work in California. It was a very difficult state to work in for anybody, especially, in a profession like mine where you really have to rely on the integrity of the client. Right? That's very important. I can get into trouble representing someone who's doing something they're not supposed to be doing. So, I kind of steered clear of California for the first part of my journey in practice. Over the last 3 years, we've really seen a lot more activity in California. Right now, it's completely in shambles. I don't think anybody in California is making money. But what I will tell you is when you go to California, the products that they have and the knowledge that they have, they're 20 years ahead of them. I would, talk to people from California before I really started spending time working there, and I think, they're arrogant, they think they know something that everybody else doesn't. You know what? The reality of it is I think they actually do. I think they actually know some things that nobody else does. I'll give you a prime example. There's different types of extracted products that people use to make vape cartridges. You can use CO2, you can use another solvent like ethanol, people use hydrocarbons like butane, and then there's just straight ice water type extraction. You go to a small market in even Florida, Ohio, for example. I have a lot of clients in Ohio. CO2 vape cartridges are huge sellers in Ohio. People think they're great. In California, that to them is archaic. They don't even sell it. They don't make it. They don't want to hear about CO2. No one's going to buy it. It's just like you're behind the times. But in some markets, it's cutting edge. And so, I just saw those differences. The products that they have, the innovation that they have, it's different. Florida, to me, is kind of middle of the road. There's a couple operators here that have started to get it, and really what they've done is they brought talent from those markets here. But the reality of it is, Florida's not, there's nothing special about the quality of this. It's, if you go to California or to Colorado, it's behind the times.
So do different states not work together at all? Like, with marijuana?
They don't work together at all. They don't work together at all. Every state has whatever board they've decided. Here you've got the Department of Health. In Ohio, this is great. So if you're a cultivator or manufacturer, you deal with the Department of Commerce. If you're a retailer, you deal with the Board of Pharmacy. So if you're vertically integrated in Ohio, you've got two different government bodies that you have to deal with, and neither of them talk to each other. They'll tell you contradictory information. It's absolutely, you have to experience it to actually believe it. It's everything that you think about bureaucracy, it's right there. I would go bananas trying to operate a vertically integrated operation in Ohio. It would make me crazy.
I'm afraid we have to stop this. It's 1:15, and I know some students have got classes that they have to get to. So
Thank you for having me.
you have to use 10 minutes for a class. A bunch of next class is a bunch of anatomy